Las Vegas. Welcome to Vegas Realty Check. I'm your host, Tiana Carroll, and thanks for joining us again for another episode of Local Las Vegas News. Today we have a very special guest, actually a returning guest. If you've been here before, then you know that we have Gregory Cook from Castle & Cook. He is one of our preferred lenders, worked many, many years in the business here in the Valley, and is quite knowledgeable. Matter of fact, you come about once a year to the show and sort of give us an update of what's been going on. How have you been?
I've been good. Yeah, I think this is about five times for me, something like that. Yeah.
Wow. So more than once a year, because I think that we're in 3.5 years now of the show. That sounds crazy. It doesn't feel like it's been that long, but it has. It has. So today we got all of these alerts. We're here in Vegas that spring is here because the pollen count is insane, and the weather bug was sending me notifications all morning that there's allergens in the air. They did not have to tell me. My eyes were swollen when I woke up, red, itchy.
It got you, huh?
It got me. Yeah. I don't need those alerts. I'm jealous of people who need the alerts. Like, oh, there's pollen. Oh, I don't have allergies. It doesn't affect me.
It'll find me soon enough. So, spring's in there, and we both got our spring colors
we're
on.
Matching today. Matching. So if you're on the listening side of the podcast, you will not see, but we are in our burgundies and blues. Yep. We look quite dapper.
Yep.
It feels good outside. I got to wear short sleeves and a spring dress today, which is crazy that winter's over because it felt like a flash in the pan.
That was quick. It was quick. I loved it. Plenty of rain, good snow around the area, so it was very nice. I'm not ready for it to end.
Yeah, and well, last year you were here in April.
Okay.
And we were still wearing sweaters and stuff because we had this weird winter that just drug on into the middle of our spring.
Right.
That's not happening now.
No, not this time.
Nope, not this time. It looks like
it could come back.
It could come back. Yeah. We're supposed to get a little more rain. I know you like the rain this year.
I do. We need it.
We do. It's been helping the lake and all of the plants. Everywhere, all the plants in the valley look like it's spring. When I've been out showing houses, I've seen blooms on plum trees and apple trees already.
Yep, our fruit trees in our backyard are already sort of budding a little bit, but I love the rain because it means snow for the mountains. I'm a big skier, kids snowboard, so
we had an avalanche this year at Lee Canyon.
Oh, we did.
That was crazy.
That was interesting.
I've never seen that before.
I've never heard of that here.
Yeah. All that rain definitely affected us.
I think that 120-inch base at Lee Canyon, which is
insane.
That's mammoth.
Yeah.
Mammoth snow.
That's cool.
Yeah.
That's cool. So we got this amazing winter snow and then this early spring. I feel like I love Vegas even more. Okay, so instead of just talking about Vegas spring weather, we do talk real estate, and you've been here plenty of time, so you know that we always go over the numbers for what happens in our real estate market. And first we talk about our single family homes. Okay. So last year, let's see, you would have been here April of last year. So that would have put us around 5,000 homes on the market, right?
Okay.
Do you remember that?
I don't.
You're like, no.
Yep.
April of last year would have put us just under 5,000 available homes on the market. So right now we have 3,351 homes available on the market. Yep. So it's a little different market than last time we saw you.
It is. But warming up, I mean, obviously getting hotter, getting busier. There was a percentage that came out for the Mortgage Bankers Association that loan applications are up 40%.
Yay! That's great news.
I definitely feel it.
So do I.
It's just that rumor that, well, first of all, rates did come down. A little seesaw.
Okay.
They went down, they went back up, but just the rumor that rates were coming down got plenty of people off the fence, as it should.
Yeah. And so we're seeing that in our sold numbers this week, because now there are just 449 sold units last week. Okay. And that is an increase from the week before and the week before that. So each week we are seeing more homes being sold each week here in Vegas, which is a definite factor that spring is here. If it's not the pollen and the swollen eyes, it is definitely the sold numbers and the price decreases. So there was 350 price decreases this year. Yep. Yeah. So last year in April, when you would have been here, the prices would have been, the decreases would have been a lot lower. I would assume there would be less than 100 at this time last year. So that was, coming off of the rates going up for the first time.
Right.
Then people sort of got used to it, and then people thought the Valley was appreciating, so then they started raising the prices, and they level out. And each week we've been seeing about that 350 on those price decreases. Yep. So those are the numbers talking about our market. That's what you're seeing, because you're seeing a increase of applications.
Yes. Yep. Yeah. And the offers are getting accepted. You can still get in and get some seller concessions paid for. As the market gets busier, that's going to get tighter. Where when it starts getting 5-10 offers on the table, which some properties already have, they're not going to offer those concessions. And March and April are poised to be very busy. So
this end of February, beginning of March is one of those strange markets where half the homes are going under contract with multiple offers. I know I've had a couple that have gone under contract above list price. So we're seeing that again. And on the flip side, I have one where sellers were offering concessions to get the house moving to buyers. So it's just all over the road right now. And it really is in the negotiation, like getting those seller and buyers to come to terms is so important in this specific market right now. Not that it's not always important, because it is always important, but usually everything sort of flows in the same direction. But now it's just like a chaos, a tornado of what's happening in our market.
No, it's important. And then they have good agents like Tiana and Trish that know what's going on in the market and can negotiate appropriately. So experience and being in the market counts.
Yeah, experience and being in the market counts. So you are a lender.
I'm a lender.
Every time you come here, we talk about stuff. If you haven't seen his videos in the past, we've talked about FHA and conventional. If you don't want to go back, down payment assistance, all of that stuff. If you want, you can go back and check out those and see what's going on with the basis of the loans. But I think today we had the idea to sort of talk about some pitfalls, because once you do get into a contract and first you get your pre-approval letter, then you get into your contract, there can still be some pitfalls there that affect the contract and your availability to buy.
Yes. Yep.
Right.
So at least what I do with clients is I'll send out a do's and don'ts list.
Nice.
Do this, don't do these items. As a lender for 21 years, I've seen it all, the normal stuff, and then things that surprised me, or like I can't have a do's and don'ts list that has 30 items on it, but maybe the 10 most common, that you see out there. So. All
right. Well, I think we're going to talk about at least 5 of the most common that are on that do's and don'ts list, because it is a little heartbreaking, if I'm being honest, when you have a client that does go into contract, they've got the pre-approval letter, they are thinking they're moving forward, and then in the underwriting process, that's the process in the loan where they go through everything with a fine-tooth comb and verify employment and make sure that everything you told them is correct and things like that, then that is protected in our valley in what's called a loan contingency. That's part of our residential purchase agreement, and the money, your earnest money deposit is protected in there. I like to do 21 to 25 days. That seems pretty standard. Wouldn't you agree?
Absolutely. Yeah. It's strong enough for the lender, and but also doesn't scare the seller away. To know that they likely have a strong loan on the table.
Right. Yeah. Right. So at 21 to 25 days, you're protected. Your EMD is protected during that underwriting process. However, there are some times that can blow up during a contract and during the underwriting process, and some of those things we want to talk about, so that way you don't make those mistakes if you get into a contract and you want to get it to finish, because that's what we all want. Let's get that house. So let's talk about those pitfalls of underwriting. So first and foremost, employment.
Yeah, so that's 90% of that, 95% of that's on the lender. We really need to, have all of your employment information available, have verified it. So most of that should be taken care of. The only things that I've seen over the years, something that surprises is the client, during the time that we pre-qualified them and now they're in contract, they change jobs. Or they change job classifications.
Classifications is a big one.
Job classification is a big one, especially if they went for something like I'm salaried or hourly to I'm going to make more money, but now I'm commissioned.
Right. Contracts change everything.
Yep. So when you change that job classification type, we need 1 to 2 years to look at what that commission or bonus space is going to be like, and definitely it can be a big problem.
Yeah. What about changing jobs in the same classification? Say I am a lawyer and I move law firms.
So if you have a typically in that type of situation, they'll have a contract. I work for ABC law firm now. It's XYZ, and Mrs. Smith is going to come over as a lawyer, and her salary is going to be $150,000 a year. That should be okay. It's when they're coming over and their salary is much lower, but maybe they're looking for the upside of, now I'm going to make bonuses off of lawsuits and that sort of thing, and now we don't have that history. So yeah, that can also present a problem.
Yeah, definitely. What about any other red flags in the employment that you discuss with people?
So there'll be times, and again, it's for us to verify this, but a client will say, well, I was pre-qualified based on full time, and so the lender's like, okay, 40 hours a week, but full time for some employees, it's 32 to 36 hours.
Yeah,
and if that wasn't verified, which as it should be, a good loan officer would verify that, then it can be the difference between qualifying for 350 and 325, and it can be a problem. Or there are employment verification sites that have a cost, and some loan officers don't want to put out that cost for that without knowing the deal's going through. And now they find out, oh, my client doesn't work 40 hours a week, or their tips are less than we anticipated because I have 2 paychecks and everything looks great. But when you do a 1 to 2 year average, if you didn't get paid that $45 for verification of employment, it can surprise you after you spent $600-700 on appraisal, after you spent $500 on a home inspection. It's very little for a loan officer to just do that extra step. So.
Yeah, and that's why it is so important to make sure that when you're shopping around, you get yourself a good lender. It's every bit as important as getting yourself a good realtor. Good
local lender. If they're out in the cloud and they're a different state or one of these big websites, they don't. I work here. I have to look Tiana and other realtors in the eye and stand up for what I did. And so, but when you're in another state and just some website, shortcomings happen. I've seen it a lot.
Yeah, I have too, which is such a shame.
Right.
Because ultimately it's going to be the buyer and seller that pay that price. Yeah. And that's terrible. So there are also some other pitfalls that show up in the underwriting process, like late payments.
Late payments, if you have a credit report, for instance, that has expired, and sometimes clients will go dormant, and then all of a sudden they're like, hey, I want this house, and they write an offer, and now for some reason the credit report can't expire while you're in contract. So if your credit report expires on the 15th, then we're going into contract on the 1st, and I say, hey, we got to pull a new credit report, and now something late popped up that can drive your score down. Yes, absolutely. Yep.
And that happens. Sometimes people get a pre-approval letter and then they're sort of dipping in and out of the market instead of going full steam ahead.
Absolutely.
That pre-qual letter expires, and then when it's time to repull, they're just out of luck.
Get those pre-qual letters refreshed if it's been a while. 60 days can change a lot.
Yeah, well, in this market, it can change everything. Yep. So that actually goes into my next question, because some of the things that can affect that loan that people don't even think about tend to be like things like homeowners insurance or the HOA of the community.
Yep.
So those are things that you want to give. Well, I want to give to the lender from the jump. I want my lender shopping for my client's homeowner insurance immediately with the homeowner.
Yep.
So I know about that. And then HOA, that's a factor.
Both of them are important. We do estimates on homeowners insurance, but if the client has filed lots of claims in the past, with sometimes there's little chips on your windshield, or maybe you filed a claim on a previous home for a small leak or something like that, and we estimate that it's going to be $60 a month, and then we find out that it's going to be $150, then that can definitely change things.
Surprise!
Or you've been shopping in Las Vegas, and now you're going into contract on a property in Pahrump that has flood insurance, and the property can have an extra $150 a month in flood insurance, and that can absolutely change things. We have that. Vegas doesn't have many flood zones, but Pahrump does. It's a very close market. There's becoming that commute, and if you're shopping for $300,000, you have to add in another $150. I've seen it $200 in flood insurance. You may not qualify. Homeowners Association, absolutely same thing. I'll always add in a factor for a homeowners association. It's just a conversation between the lender and the realtor. But if we're shopping for a homeowners association at $55 and you go to a guard gated community or to a townhouse and now it's 150 or 200, same thing. It can affect that. So it's just that communication. Just the communication.
Yeah, definitely affects the purchasing power. And we don't want any pitfalls. We want this to run as smoothly as possible.
A smooth, relaxed process. No one wants to be getting ready to hire a moving truck, or you're thinking about decorating and that type of thing. And then all of a sudden it's, we have a problem. But again, good experience, realtors and lenders figure out those before the contract or very quickly within the contract period. Yeah.
I like that you brought that people start thinking about decorating, because one of the pitfalls could very well be either opening up like a new line of credit, like you're going to RC Willie because you want new appliances or furniture, any of that. Tell me how that's going to affect the deal.
Absolutely. And then definitely on my do's and don'ts list, and I'll let them know, hey, just because you're going to Best Buy or RC Willie or whatever and getting that 1 year same as cash, when we see it pop up as as an inquiry, we can discuss inquiries. We need to account for it, and we don't know necessarily like, I'm going to pay it off the 11th month or right before it's closed. We don't know that. We can't guarantee it. So if you just bought a $4,000 washer, dryer, refrigerator package and threw in the couch, and we need to look at what that new $5,000 liability is, and if it's $125 a month, we're going to add it. As long as I've been doing this, half the time it's been okay. Sometimes it's been a problem, and we're either paying something else off or we have to cancel it. It's
I have a horror story with a client who has an apartment full of new furniture and TVs because she bought it all before we closed, which, in my defense, I did tell her I too have a list that says don't open lines of credit, be on time for everything, don't change employment. And she just got excited. She figured it was a good deal.
Don't co-sign for your kid's car or for your best friend's car. We see it's like, well, it's not my liability. They're going to make the pay for it. I'm just helping them out.
Yeah.
Case closed, $500, $750 new liability they have to count against you. And typically a problem.
Yeah. So in the underwriting process, you do have the ability to sort of explain or dispute things.
Correct.
So there's slim instances where if you did have somebody previously as a co-signer that you would have a letter of explanation saying this person makes the payments, they can show that the money comes out of their bank account, and then that could be sort of washed from the underwriting.
Absolutely. A lot of people will co-sign for their adult children's car, and they're making the payments for 12 months. We can verify that, then we can remove that liability. What a lot of people may not realize is that right before closing, lenders verify your employment, that it's the same as it was the last 30 to 60 days, and then we do a soft credit check inquiry. And sometimes we just see something normal, hey, you went rate shopping, with someone else, not a big deal. But if we see, Finley Finance or RC Willie, we have to verify that it's just a soft inquiry, but we want to make sure that we aren't accounting for something that we weren't aware of. And usually it's just a simple explanation, but on rare instances it can be a problem.
Yeah, we don't want to see any inquiries, people.
No.
Don't sign anything. Don't apply for anything. That is not happening.
Don't drop cash into your account. I had $10,000 in my safe from a refrigerator. We don't know where that cash came from. To us, maybe it's a loan from somebody like that. Cash is just dropping cash in somewhere has also caused problems.
We like our money seasoned. We want it sourced and seasoned. That is very important. All right. So how does the appraisal, especially if it comes in low, affect that? Is that a pitfall of mortgages?
Yeah. Low appraisals, and they're happening a bit again because as the market heats up and you're talking about 5-10 offers over list and that sort of thing. $350,000 offer and the appraisal comes in at $340,000, you only get your loan to value based on the appraisal price. So
it's not a seller's wish list. It's appraisal price.
Right, absolute appraisal price. So it's in the RPA in the contract. You either negotiate it. Some people split it. Sometimes the seller says, "I want my price, and you need to come up with the difference." Or in the worst case, unfortunately, you have to cancel. But you can contest the appraisal. Good agents can say, well, these is where the comps are coming from. This is why I think the property is superior, and so they'll contest it, and the appraiser will certainly take a look and And sometimes they come up, and sometimes they're not able to get there, and then it's negotiation time.
Yeah, I've been really, really lucky to be across from pretty great appraisals most of the time.
Yep.
And I do have appraisers that are at least open-minded enough. They're not the Gestapo out there saying, no,
Absolutely.
I say it's this. And
Yep.
so if I have something that I'm like, hey, did you know that there was a brand new AC in here? That's going to bring value, and that can change.
Yep,
So,
absolutely. Yeah.
all right. Any other pitfalls of lending that we should know about? But I know we covered the top 5. But there's got to be a dozen,
those are
right?
the basics. You know, if I've had someone in the past that retired, you know, and it was like, well, I'm gonna make really, really good money in retirement. Well, that retirement hasn't hit yet, and now we have to verify that retirement. So again, that's more of a change in classification. Things that were not disclosed. You know, we need to know if there's an IRS lien that we're not aware of.
Undisclosed debt.
Undisclosed
That was on
debt.
my notes. Did we not talk about that? Oh,
Yeah.
well, I'm glad you brought it up.
Hardline red stops do not pass go are IRS tax liens, regardless of what they are. If you're in a tax lien repayment, that's fine as long as you've been paying on it for at least 3 months. But then we do need to add it to your liabilities. You know, you owe $8,000 from 2 years ago, and you're paying $200 a month on it. That needs to be added into your debt to income ratios. The other one that's a hard line stop that somehow we didn't see it in the initial credit report is child support. And
Yep.
I'm glad. If you're paying $500 a month in child support and we didn't initially see it, new credit report, something popped up. That's definitely something else we have to add into a liability, and it can present a problem.
Yeah.
Yep.
Yeah. I think that's one of the importance of doing shows like this, where we can at least help educate the public. So that way, if they do fall into a situation where they don't have a great realtor or a great lender, they at least have a sort of playbook on what they should be looking for as a consumer.
Yep, absolutely.
Yep, I love that. And I do appreciate you coming out every year and talking to our guests about all of this amazing information when it comes to lending. That you offer all sorts of different products
Yes.
for lending.
Yep.
Because there's a gambit, right? We have some government-backed FHA, VA, and do you do a lot of USDA?
A lot, no.
Okay.
But it's out there with, again, Pahrump is, and actually small parts of Las Vegas do qualify for USDA.
I was going to say, does things zoned county, does that qualify for USDA?
Sorry, say that again? What?
Do properties in Vegas that are zoned county, do those qualify for USDA?
There's a map, and you put in the address, and you look at the map, and I think even parts of South Summerlin are part of that.
Yep.
And even Enterprise, Spring Valley, a little bit. Just because I don't do a lot of them, I don't know where the boundaries are, but it is another zero down
I was gonna say that.
income qualifying loan, like down payment assistance. There's income thresholds, another good government insured back product like FHA and VA.
Yeah, and then of course conventional.
Conventional, absolutely. Jumbo loans are becoming more popular again. And again, they've always been popular, but a jumbo loan, a non-conforming loan, is really anything just above. For Nevada, it's $766,000.
Right.
So if it's a $780,000 loan amount, it's considered a jumbo loan.
Yep.
You can do HELOCs and HELoans with those jumbo loans to help with that qualification. Because really, jumbo loans, you're starting at about a 10% down payment, but there are there's seconds that you can add on to that to alleviate some of those pains, because the criteria for jumbo loans are a little more stringent than the lower criteria. Credit adversities they're more strict about, but those jumbo loans and HELOCs and HELoans are very popular right now. The HELOCs and HELoans, really just the difference is a HELOC is a line of credit. It's an adjustable rate. With credit card interest rates from 22, 26, 29%. If you have debt, but nobody wants to refinance their first, of course, you've got a 2, 3, 4, 5%, interest rate in your first, you're not going to want to refinance. The HELOC or HELoan is a great way to take equity out of your house to pay that off.
In fact, it is.
And with rates, anywhere from the 8s to 12 and 13s, it's obviously half or a third of what credit card interest rates are.
Yeah. Can you imagine if home interest rates were 29%?
I could not.
Nobody would own a house.
Nope,
Be like,
absolutely.
we're renters for life. What's up?
Absolutely. Absolutely. Yeah.
All right, Greg. Well, I appreciate you coming on the show. If somebody does want to talk to you about getting a loan, how did they get a hold of you?
Gregory Cook with Castle & Cook Mortgage. You can reach that 702-324-6229. And I tell people I'm available 8 a.m. to 8 p.m. I don't work banker's hours, and I work as hard as our fellow agents. And please reach out to me. We'll take good care of you.
Yep, I can verify that. I have worked with Greg many times, and he is very knowledgeable. He is kind, and he is so good with the clients. Just communication is so key.
Yep,
Keeping
definitely.
everybody in the loop, knowing numbers. And I know I can always just send you, this is what my property list price is, and this is what the HOA is, and this is what
Absolutely.
our taxes are. What can we do?
Yep.
You always run those numbers. Excellent. So we are here every Thursday talking everything real estate and real estate news. My name is Tiana. If you want to have a conversation with me, you can call me at 702-379-9948. Like I said, we're here every Thursday, 9:30 a.m. If you find content or value in this content, make sure you join our tribe by like, share, subscribe, hit the little bell notification so you know when we go live. We are here every week, and we'd like to see you next week. Until then, Vegas, have a great week.
Thank you.
Bye.